Hello, 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 and welcome to Trading Made Easy right here on YouTube. I am certainly glad that you found yourself here. Okay, so tonight we are going to mark up. We're going to take it to the basics, right? We always want to focus on the foundation, and that is price, that is structure. So I'm just going to walk you through a markup evolution on UJ, right? And this is the same thing you do with any instrument, whether it's Forex, crypto, stocks, it doesn't matter. We got to mark up our charts. Now, one of the things that I would suggest is that you mark up your charts on the weekend or on Sunday when, the market is just trying to wake up and that kind of thing. As you get good at it, you can mark up a chart in literally minutes, right? And you can mark up several charts and things like that. So what I'm going to do is just walk you through what I do when I mark up my charts, and then I'm going to show you really brief what that looks like with the indicator system that we use. Now, the indicator system is great. I think that it's one of the best in the industry, but nothing beats price. And so we always have to start with structure and use our indicator system as a confirmation. So I always start, of course, on the monthly, right? And only thing I'm doing on the monthly is I am identifying the high point that price went relative to current price, and the low point price went relative to current price. Remember, each one of the candles represents 1 month from the opening to the close. So when you look at it from that standpoint, it's not necessary to go to an area that's really high simply because it's a high point, because that area could be 3, 4, 5, 6 years prior. So if we went to say this area, this candle right here, when we look down, we see that that is in 2015. That's not relative to current price. So we want to stay relative to current price, especially if you're not a position trader. It's not necessary to analyze that far back, right? So with that being said, I'm gonna look at this area right here, these 2 wicks right here, and that's in 2020, right? That's in 2020. And then I'm also going to be looking at this wick right here, and I'm gonna drop my my line there. So now we've identified, now because, let me just do this, because this wick came to this point relative to this area, this is consolidation here. And then when you look over here, we still have some consolidation around this price point as well. That's a strong indication of this price is a strong area where price had a reaction, And so, and then of course, anytime price is resistance and support, you definitely want to, identify that as well as a strong key area. And so this price point is a strong key area because we have resistance right here, and then we have support right there, right? And then of course support, and then support. So that is the low, this is the high. Now what we want to do is on the weekly, the only thing we're doing on a weekly, now we're going to begin to look for patterns. We're going to begin to look for trends and patterns, right? Within the 2 high and low areas you've identified from the monthly. And so here I'm looking for a trend. And right at this point right here, I see a nice little trend, right? So you identify that, okay? You identify that. Price came up and bounced down, up, down, somewhere in the zone, right? And let's go ahead right there. 1, 2, follow through. Okay, so now we have identified a trend right here. Now also, if you see consolidation, you can identify the consolidation as well. If you see a trend, you can identify the trend, and that's going to be very, very important. Now what you want to do is drop down. This is the simple, easy top-down analysis is what it is, okay? And so now when you drop down to the daily, what you're looking for on the daily is to see if price still respects the trend. Is it still respecting the trend, right? And it is. It's still respecting the trend. Let's see if we can pull this over here. Now, because I don't want it to cross over. So I'm gonna just leave it right there. No problem. Right? So price is still under our weekly trend line. It's still under our weekly trend line. and it's a bearish trend line, right? So far we're seeing a bearish bias on UJ, right? And then again, if you see consolidation, go ahead on and identify the consolidation as well. If you see consolidation, identify it as well. Even other trend lines, but I'm not going to do all of that because I want to try to keep it simple and clean. So now what we want to do is just drop down to the 4 hour. We're looking for the same thing. Is price respecting our trend line? It looks like I froze a little bit. Okay, it's coming back up. There we go. All righty. So we're on the 4 hour. We're on the 4 hour. And now what we want to see is price still respecting that weekly trend line. Okay, still respecting in here, and up in here we still have some respect going on. Let's see, let's bring it out some. Okay, kind of went over, but it came right back down, so I'll keep that. I'll keep that, and still some respect right here as well. So in essence, it's still respecting our trend line. So we had a little push above, but the bearish momentum pushed it right back down, right? So this is what you want to be seeing when you're doing your trend line. This is an area where when price came to this area, right here, what did it do? It pushed back down, right? It pushed back down. Sometimes the tools want to do this thing, but as you can see, it pushed back down when it came to that area. Okay, and what else happened here? Okay, when price came to this area, right, what did it do? It pushed back down. Why are my tools acting up? Okay, I can't be bothered with that. But you can see price pushed back down. I don't know why that's happening. Okay, and then it got a little close and reacted, pushed back down, and now we're here in the same area. And what is price doing? It's doing the same thing it did previously. It's pushing back down, and so it's still respecting this weekly trend line. So we can clearly see where's price going down, right? So the trend is bearish. The trend is bearish. What is price doing currently right now? This move down on a bearish trend and price is going down. That is what a continuation to that trend. It's a continuation to that trend. And so that's on the 4 hour. Now we drop down to the hour. We're looking for the same thing. Is price still respecting our trend line? And it is. It's still respecting the trend line. Do we see any other patterns? That's what we're looking for, because price repeats itself. So on my 4 hour, I do see consolidation right here, right? I see some consolidation right there. And I also see some, well, it kind of went that way, and that's right, because I see consolidation right here too. Let's drop that one. Okay, so I see some consolidation right in this area here. Right, in this area right there. I see some consolidation. And you want to box this in so that you can clearly see what price is doing in relation to the area of consolidation. Okay, so that's what I see here on the hour. So what are we looking at? We're looking at a bearish trend. We're looking at price being in a continuation to that bearish trend. So price is trending down, and it did not break our weekly trend line, and also the daily trend line, because it respected that, right? So it has not broken that area as of yet. And then when I look at my MACD, which is really the only indicator that I really trade with, The MACD is under my my histogram, right? So if it's under the histogram, the moving average, you're in seller's territory. If it's above, you're in buyer's territory. Now, if the moving average, the signal line, the red line, which represents sellers, if that's on top and it's in bearish territory, that's a strong bearish momentum. That's a strong bearish momentum. And that's what I'm seeing here. So what position should you be looking to take at this point? You really should be looking to take sales, right? You should be looking to take sales. Now, you also want to identify support and resistance areas. That's very important. Support and resistance areas. You want to identify that, right? And we're looking for at least 2 touches or more. That's fine, but at least 2 for it to be considered a bona fide support or resistance area. And you're looking for those areas where it reacted. So price came down, came up, dropped, came up, dropped, came up right here, dropped, right? And then it broke through, and now it became support right here, reacted, pushed up, reacted, pushed up. And you can see that happening in and around that, that price line, that line right here. So when price comes to this point, what am I expecting to happen? I'm expecting for price to react the way it did on previous time. So I'm expecting to push back up. Now, what I would tell you is, let's go to the 4-hour, because the higher the time frame, the stronger the structure. The higher the time frame, the stronger the structure, meaning it's going to take a little longer. It may take more visits to those areas before it breaks through, because it's on a higher time frame. The lower the time frame, the more likely you have fake outs, right? The more likely the structure is not going to be as formidable. It's not going to be as strong. So you want to really identify those areas on a higher time frame, and the 4-hour is good. So now let's look at this. The line the support line and on resistance line that I dropped from the hour, when I went back up to the 4-hour, price still respected that area. See, because this is a strong area of price. So price came, well, let's start over here, because price moves from left to right. So we come down and price broke through, and then it tried to push back up, didn't push back up, and pushed right back down before it actually broke through. Then when it broke through, came close to the area, reacted, came back to it, touched the line and reacted, came back again, touched the line, then reacted, then it broke through. And now it's repeating the same process. This is where we are. This is where we are. So I feel very confident in saying that when price comes to this area, we're going to see a push up. We're going to see a push up. Okay. So, and that's from the 4-hour. The 4-hour just really confirmed this support and resistance line here. Though I did that from the hour, is strong because the 4-hour respects the same price area. Okay. And again, I'm just kind of whipping through it, but these are the things that I do, and I'm just explaining to you why I'm doing what I'm doing and what I look for and things like that. So you always want to identify, your support and resistance for a couple of reasons. The main is because they do become areas where you can take your potential profit. They could become areas where you can take your potential profit. They're also areas where you can identify stop loss, right? So it's really important to have those areas identified. So as we go down here, in this line right here, we have price respecting it in this area. Well, it came down, pushed back up, and it bounced between the two here. It broke through, came back up close to the area, reacted, close to the area, reacted, came and hit the line, and what? Reacted. And then it broke through, because price will always break through, always, no matter what time frame. It will break through. We just don't know when. And what we also know is that on a higher time frame, it's a few visits to that area before it actually breaks through. And even though it breaks through, it's still an area that you want to pay attention to, because price will still react to that same area. So now at this point, it broke through, it retested, came right back to it, and then pushed back up, and came right back to it and pushed back up, right? And so then it came right back down to this area and this close to this area. And what did it do? It pushed back up. It pushed back up. So now price is rallying in a downward momentum here. Once we get to this area, I'm expecting a pushback. And when they get to this area, I'm expecting what? A pushback. That's what I'm expecting. Now let's go to the 4 hour and check this area right here against the 4 hour. And as you can see on the 4 hour, price came down, same thing that it did on the hour. So it's really mimicking the same reaction on the hour, which is a good thing. I like to see that. I like to see that. And we also had some reaction here too, where price came down on the line, pushed back up. Then it broke through this support area, retested, and pushed back down. Then it came back up, retested again, and what? Pushed back down before it did what? Before it rallied, broke through, and rallied back up. Now we're back here going in that same direction. I'm expecting the same reaction. I'm expecting the same reaction. So what you can do, there are a couple of things that you can do. So many different ways that you can trade where you do not have to be, beholden to the chart and watching the chart and hostage to the chart. Identify these areas. Now these areas here, this becomes what? A buy limit. You can put a buy limit right here. And you can actually do this at this point because current price is above the area. So you can put a buy limit because what you're saying is, well, when price gets here, I'm expecting for it to push back up to this level. So I'm going to put a buy limit here, right? And that, as far as pips, that's roughly 29, 30 pips. Okay. So here's a quick 29, 30 pips that you can capitalize on. Because why? Because price, look at how price reacted to these two lines previously. I'm expecting the same thing. So here you can put a buy limit here if you want it. You can put a buy limit here if you want it, right? Or you can simply just put an alert at these price points. And then when price alerts you, when the system alerts you, then you go back and you check it out and, you can take the trade. And that's basically what I do when I mark up my charts. All without indicator is just price. Price does not repaint. Price is price, right? And so all you're doing is identifying what took place previously, and you identifying your support and resistance, any patterns or trends, so that you can get your bias. So what do we know about UJ right now? That is in a bearish momentum. It's a bearish trend. It has not broken the bearish weekly trend line. It's currently in a continuation. All of that is what we're able to identify on this top-down analysis. So we know we should only be looking for what? A sale. We should only be looking for a sale. We even identified our potential take profit areas. And if you wanted to catch the pullback, that's why you would do a buy limit right here, right? You'll do a buy limit right here and catch the pullback and take it back up to this point. Okay, take it back up to this point. If you're riding the trend, I will wait for a pullback. I will wait for a pullback because look at where price is. You see this consolidation? Price, and that is represented by this dashed line, current price is at the smack dead in the middle of this overall consolidation. It's smack dead in the middle of it, right? So what I would be looking for, if I wanted to stay with the trend, of course, I would be looking for a pullback somewhere around, just identifying the same thing. What are we doing? Identifying support and resistance. And we're doing it within the consolidation box, right? So we have some reaction in there. How many times it hit this line right in there, right? So, and then look at price right here, right? It's just vacillating on this line, right? Vacillating on this line. So I will be looking for price to pull back to at least that area right there. And then I'll take it down to my next support level. That's what I would personally do. If you wanted to do the pullback, then you can put your buy limits at these two price points here, because we expect for price to what? React. Now, You can be, you know, have other obligations, you're working, whatever the case is, you're not able to be at these charts. You don't desire to be at these charts. You can set it, put your buy limit and put it at a 0.01. That way, if you're not right there and price does something, you know, opposite or what have you, it's only 10 cents. It's only 10 cents. And when you see that, hey, price is doing what I you know, expected it to do, then you can drop another position at the lot size that you desire to put, right? So as simple as that. It's just that simple. So now on the 15-minute, which is my execution time frame, when I enter the trade, we're basically looking at the same thing here, right? So we have some consolidation right around in this area. Let's pull this down some so it can be right there. And overall, we're respecting that time frame, and price is still in a continuation on the 15-minute as well. I'm expecting price. What am I expecting price to do? I'm expecting price to come to this area right here. I'm expecting price to come to this area right here. That's what I'm expecting price to do. Yeah, I'm expecting to come to this area. So let's jump over to, so that is the top-down analysis with just naked chart, no indicators, none of that. Now I'm going to go over to the indicators and I'm going to show you. So that is UJ, right? So that's UJ. So we're on UJ now, and let's just go to the daily. We already know that we're looking for sales, right? So now let's go to the previous big arrow, and the overall on the daily is a bullish big arrow on the daily. And what is price currently doing right now? Price is what? Is bearish. The candles are bearish, pushing down, right? Pushing down. And what we expect for price to come down into this area. Now I want to show you something really quick. And this is just the power of combining your knowledge and understanding of top-down analysis with the indicators, right? And it will confirm one another. So that's on the daily. I didn't mean to do that, so let me just take that off. Okay, so let's see. We have from the current candle down to the bottom is roughly about 130 pips, right? Roughly about 130 pips. So let's go back here for a minute on the daily and let's see. So we see that price is currently bearish for sure. Currently bearish. And that's on the daily. Stretch it out for you. Okay, so this is current price right here, this dashed line. And it was 130 pips, right? So roughly around about this area here, okay? This area right here is roughly about that is, you know, that 130 pip area, okay? That's that 130 pip area. So I will be doing what? Drop another support line, drop another support line, right? And let us, we got to have some wick action going on. So we have a little touch right there. This gets messy after a while. So what I will do is I'm going to change the color. So that's our daily. That's our daily low right there, right? And so listen, price came here at this area when September 18th, price came to this area. It came to this area again, July 31st, it came to this area, right? It wicked past the support line right here. It wicked past it on the 21st, right? And price, again, repeats itself. And this was a strong move down. It was like a straight move down. And that, anytime that you have, you know, straight moves, that's an indication of momentum, strength, pulling it down, right? Pulling it down. And so now we're going in that same direction. So I do expect price to come to this area. But again, those two previous areas right there, we're certainly going to be seeing a reaction, a pullback, right? Now that's 100, and from here to here is roughly 130 pips. Price don't just drop straight down. It don't just go straight up. There's always going to be some back and forth. There's going to be a period where price is going to breathe and push back before it continues to rally in the direction that it's going. And so that's what I expect to happen. But ultimately, this would be the area where price is going to go. And then, of course, it'll boomerang right back. This is exactly what it did. It went straight down and boomerang back up. It went straight down and boomerang. Well, it pushed it. It went down here. Then it pushed it further at this point and then pushed right back up. So that's some strong reactions. And I expect the same thing here. But it has to hit these areas first, right? So this is the areas where I expect the breather to take place, if you will. The breather to take place. And here's the thing. It could go straight down to this area, right? We don't have a crystal ball. We can only read price, read previous data, and base our decisions collectively on that, okay? So let's go back to our indicators. Okay, so price is coming down into this area here. Now, when price come down to this area right here, that represents that blue support line that I just identified. That's 130 pips. Remember, this is a daily chart. It's a daily chart, okay? And now, so that's on the daily. So it's coinciding with this bearish move. Then we go to the 4 hour. 4 hour, what are we looking at? We're looking at a bearish move, right? Pushing it back, pushing it out. It came out, now it's rallying down. Everything says bearish. Everything says selling momentum, right? Then my MACD, I don't use my trend surfer, but the MACD, same thing, is penetrating through my histogram. My signal line is on top. I have space between the two moving averages. Bearish momentum all day long, bearish momentum. And that is the position that you really should be taking. And then, of course, we have our, let's go back to this 4 hour real quick. Now, typically, I don't teach trading in the middle of the zones, right? I don't teach that, but you could. It's just different ways to trade. I'm gonna just say that. But based on our zones, I do teach a very conservative way of trading, and my training is geared towards individuals who are very, very new to the market. And so this is safe trading. The system, simplicity system, is phenomenal because it's like trading. It has training wheels, right? These are the training wheels that it provides you, and it's great. So just like you riding the bike with the training wheels, you have more confident. You really don't know how to ride the bike, like for real. But the training wheels keep you afloat, and it gives you the opportunity to learn. And that's what the system does. So that's why I recommend that if you don't have the system, absolutely you want to get the system. And then, of course, you want to get with me so I can train you on the fundamentals, on the technicals, on structure. That way, while you are, having your training wheels, you're learning what this all means as it relates to market structure. And so, yeah, so bearish all day long. It's below the 50. We certainly are in bearish territory. We're in bearish territory. And so, yeah, this is definitely a good position to take. So that's the 4 hour. The 1 hour, we pushed through. We already pushed through. And now we're inside of the demand zone. Because remember, now this is a different type of training, but I do want to point this out. Whatever happens on the higher time frame is playing out on the lower time frame. So you have each candle on the 4 hour is 4 hours from opening to closing. So how many 4 hour candles, how many 1 hour candles does it take to make one 4 hour candle? That's 4 candles. So on the 1 hour, we should see what? 4 additional candles going where? In the downward direction. And that is the reason why When you go to the hour, you see price in this zone because it went down those 4 additional candles, right? So price is currently here, it's 12:30. So let's go with this. This is still active. 1, 2, 3, 4. Right in here from this point, that is what you see inside that 1 4-hour candle, just pushing it down. Okay. So nevertheless, we're in the demand zone now. We have a bullish big arrow, but are we bullish? That's the question. We're not bullish. It's not ready for a buy yet. It's still a very strong bearish move. It's still a very strong bearish momentum. Now, remember, I said that there will be periods of pulling back before you get to that 130 pip from the other chart that I showed you. So that is what you're going to be seeing on the lower time frames. You're going to start to see the pullback, and that's what is forming right now, a pullback, right? A pullback. Remember when I said that you can put in a buy limit at those particular areas? That is the pullback. And that's what you see on our simplicity system. So it just, but you're just looking at an arrow, you don't really know the backstory. There's a deficit, right? So that's why it's really important that you understand that. So I don't want to make it any longer because that is why I have my mastery course, and you can certainly take the mastery training where we peel this onion back like that. All we talk about, all we train on, all we master is the top-down analysis and structure, so that when we use our system, we know why this big arrow is here. It didn't just populate because, oh, it's time for a buy. No, it's a reason. And is it even ready yet? Just because it's in the zone don't mean that it's ready yet, right? And we just demonstrated that on the other platform. So what I'm going to do is I'm going to stop right here. My bias on UJ is bearish. Right now it's bearish. There will be an opportunity for a bullish quick 30 pips, right? Which is what you're seeing here. That's starting to form. So you can certainly take that. But overall, the trend is bearish. Overall, the momentum is bearish. And so if you drop down to the 15-minute, the 15-minute, same thing, is bearish. It's still bearish, though we are beginning to, do our little pullback. We're beginning to do it, but right now we're still strong bearish. Why? Well, we are under the histogram of the MACD, and my signal line is on top. I have space between the two, moving averages signifying volume. Then right here, price. Where's price? Price is under the 50, which is in seller's territory. It's under my 13. It's in seller's territory. And we have good space between the two moving averages, signifying strong volume, right? We are still in an overall sale. And remember the area that we identified on the other chart where that 130 pips. Remember that area? That's where price is rallying to. Price is rallying to this point right here. That's where it's rallying. These two areas right here, those are the pullback areas. This is where, if you wanted to catch the pullback, where you can get you about 30 pips. Now, these areas right here represents on the other chart with the indicators, the bullish time frame. And I think it was the hour and the 15-minute is bullish. That's these areas right here. That's these areas right here. But it's still not ready to take that bullish run. It has to get to this point. And then you're going to start to see the pullback up, and then it drop. So price will come down, rally to this area right here. Then it's going to pull. This is just my opinion, my bias based on how I understand the market. This is in no way a guarantee that that's what's going to happen. This is just based on my analysis and my understanding. And so based on that, price will come to this area right here, and then we're going to pull back. We're going to pull back. This represents, again, that area of the 1 hour and the 15-minute time frame, the bullish momentum on those two time frames. That's what's happening here. That's the importance of understanding structure so that you can dissect what's taking place on your MetaTrader 4 with your Simplicity trading system. Very, 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 very important. But keep in mind, overall, it's bearish. We're still under the weekly bearish trend line. Price is still below that. It hasn't broken this, right? And price where it came down to this blue area, this support area right here, it had a nice push, bounced right like a slingshot, came down and boing, came down and boing, right back up. So price, my expectation is that price is going to rally. It's going to make its way back here, and then it's going to rally. And we'll see if it's going to break the weekly zone from that point. We just reassess. But right now, absolutely, this is my expectation. So just keep in mind the bullish time frame that you saw where it's bullish, that those are pullbacks. Those are pullbacks. And you see a little starting to happen. It's a pullback. Other videos and inside the training class, I'll show you what to look for in the 15-minute because you do have to have entry confirmations. You never just want to jump in based on one, element or one thing that price is doing. We have to have multiple confirmations. So that's a different training, and that's typically reserved for my one-on-one coaching and, of course, my Telegram group. So I'm going to leave the information inside of the description. And for those of you that want the training, that'll be there as well. You book a session. If you don't have the triple arrow system, the Simplicity system, get the system. Why do it hard when you can put the training wheels on? It's no problem. I got you. Put the training wheels on, and then we will get together to really break down market structure, top-down analysis, and so that it's not the indicators that you're relying on. It's your understanding of the market that you're relying on. So with that being said, that's my markup for you, Jay. I hope that you all got something out of it. If you have, give me a thumbs up, a comment, subscribe to the channel, as I'll be doing more of these types of training so that we can have an understanding of price action and not so much what is the indicator saying. So with that, that's it for tonight. I'll talk to you on the next video. Bye-bye.